Hello folks, Brandon Chapman with you today. It's a Monday video for TheoTRADE. It's January 29th, 2024. Title of today's session is all quiet ahead of a big data week. You know, I thought about trying to play into the notion of all is quiet on the Western Front or all quiet on the Western Front. It was the last few lines of a novel in which one of the characters dies on that day, right? As the only report filed was all quiet on the Western Front. Pulling that from a site, but the idea is that it was not quiet, right? Someone died that day. And the question is, as we approach this week, what is going to happen to the broader market? There's a lot of stuff going on right now, right? Announcements, mega cap earnings from Microsoft, Apple, Amazon, Google, Meta. These represent a significant percentage of the market cap in the S&P 500, but also the Nasdaq 100. If we look at the QQQ, really, the only ones that are kind of sitting on the sidelines right now are Broadcom, that's AVGO, and especially NVIDIA. NVIDIA's not going to announce for maybe another month or so, but we have a tremendous amount of market cap set to announce. We've had a significant rally in the tech sector, if we look at XLK, and the broader market generally. And what's happened is we've priced in a lot of potential future growth in those areas of the market. Are they going to deliver? Right? Meaning that we're going to continue the prospect of bullishness in the broader market. We're going to look at some unusual option activity stuff today that suggests there is some people out there scrounging around in the dust heap of high short interest stocks and high beta names just in case. But on a week when we have an FOMC policy statement and a week in which we have jobs data, it makes it interesting that this is overshadowed by the mega cap earnings. And it becomes even more pronounced in terms of the significance of these earnings, given the fact that what? Again, how much have we rallied off of the end of October low to the current price? It's up about 27%. It's been a phenomenal run. And can it continue to be supported? You know, you could look at earnings and multiples for companies like Apple. It's generally not supported. You could look at the significant positive revisions in NVIDIA. Upwards of 10% positive revisions since the beginning of the year. And yet what? NVIDIA is up nearly 33%. Everything suggests that we've outrun the expectations. The bar is now set a lot higher for these companies to be able to meet or exceed those analyst estimates. And now it's a matter of, can they deliver? Today it's quiet, right? The S&P closing near the high of the session, breaking out to a new all-time high on the SPY. Everything looks quiet. Reserved. Volume on the S&P, SPY, which isn't super significant, is down today. Not even to average. We look at the volatility. The VIX, for example, shows what's underneath kind of the market. This is a false print up there today. But the fact of the matter is the volatility index, the VIX, is still higher. We're seeing trepidation. We're seeing concern by those that are concerned about hedging their interests, hedging the downside given the massive moves. We've seen skew go higher. This suggests that there is some concern that the war is not over, that risks remain. And with so many data points for this week, it takes us back and says, look, do you really want to step out there and take substantial risks ahead of companies like Microsoft announcing? Microsoft is set to announce this week. You just kind of hover over here on the 30th. That's tomorrow after the market closes. Okay. What about Amazon? Amazon is set to announce after the market close, right on the first after the market close. We look at Apple, also similarly set to announce on the first after the market close. What about Google? GOOG and Google, for example, GL and G set to announce on the 30th after the market close. And Meta is set to announce on the first after market close. So tomorrow and Thursday, we're going to have a significant percentage of the market cap of the S&P 500 set to announce. And in between those days is the FOMC policy statement on Wednesday. If we look at other data coming up this week, just pulling from Forex Factory here, we got JOLTS, we got ADP numbers, We've got employment cost index. We got the FOMC statement and press conference. We've got unemployment claims on Thursday. We've got ISM manufacturing PMI and prices. And we got jobs, both unemployment and jobs added, the non-farm employment change on Friday. All of this gets dwarfed by what's happening with regards to earnings from those companies that represent such a significant market cap. Nothing's expected in January from the Fed. 97% probability as of today of no rate cut. Makes sense. March, rate cut probabilities are about 47, 48%. How's that changed? It was 73% a month ago. Well, why is the market going higher if we're expecting a 73% now 46% probability of rate cut? Isn't that what it's based on? Well, the reality is there's some element of looking for a Goldilocks economy, right? The soft landing that whatever the Fed's going to do, it's not going to impact the broader economy. But guess what? Again, we have significant earnings that may say otherwise. We're looking at May, for example. May, we're looking at the possibility of rate cut is now over 80%. There's only about a 38% chance, 37% chance of this is a 50 basis point cut. Well, we're at 72% a month ago. A month ago, we were expecting an additional 0.25% all the way along, even including December. December now, we're looking at about a 50% probability of 375 or less. If we look at it and add all this together here, well, guess what? We were already there a month ago, pricing in a 1.25% to 1.5% rate cut. Again, probabilities have shifted. So far, the market's not responded. We're still hoping for, and we've seen positive revisions in companies like NVIDIA and others that suggest the bar is being raised for the upcoming earnings, only for then these companies to possibly even miss. Because you raise the bar, the chances, if you're trying to hurdle it, you may hit the bar and knock it down. Now, again, does this create a very disastrous scenario for the broader market if these companies fall? Yes. Okay. We're talking about close to 25% of the market cap of the S&P 500 set to announce this week. It's significant. And notice right now we have all this movement off of the breakout on the 19th on the SPY. There's nothing below this really to hang on to until we really get back to 477 again. So if we start to break, this may be the moment that the volatility markets have been pricing in terms of the potential downside. Now, what's interesting, if you look at the VIX 3M to VIX ratio, the term structure, this has been falling because why? Leading into this week, there's been some volatility buying, right? Hedging activity, concern about what this week may entail in terms of price movement. And so now we're going to probably get more of a true reading once we get through this week of where the market stands from a volatility standpoint. If we rally out of this, we'll probably see some near-term 30-day vol selling, and this may pop up here again. Okay, skew is still remained elevated. Again, still pointing to the downside potential of the market. But again, hand in hand with high skew is you have a greater frequency of small up days, which is exactly what we're seeing. And today we're up 0.75%. Okay, and so the moral of the story of this is saying, look, be careful. Right? This week may bring a lot of volatility. So don't get too far ahead of yourself expecting that things may come out positive and then things turn, or expecting that things may go negative. We could see some very quick and very large movements, which unfortunately, there's, if you have some short calls on right now, I mean, again, there may be some hard decisions to make in the coming days before some of these announcements that are coming out. And first off, tomorrow, we've got what? We've got Microsoft, we've got Google as well announcing tomorrow after the close. It's a big deal, right? There's a lot of potential movement in the broader market, and it may not be done yet. But the more we go up, the bigger the possibility of a large downside sell-off at some point once we kind of price all this stuff in. So again, I wish I could bring a harbinger saying, hey, this is what to expect, but I don't really know what to expect. Nobody does. And that's why volatility is rising on the VIX. That's why skew is increasing. That's why front to back month volatility, the 3-month to 1-month VIX is falling, because everyone's buying protection right now because you have some nice gains over the last 2 weeks. You may as well try to protect them right now. And again, we look at today in terms of the dollar /GC, gold, try this again, /GC, gold trying to make a move higher. We're at 2050. Again, weaker dollar the last couple of sessions has led to gold rising. You can also see this reflected in Bitcoin. Bitcoin had a nice move yesterday and again today. In fact, last week on Friday, we talked about, I reviewed some bullish call activity in Mara. Got a nice pop, but faded here. Again, this is a difficult spot for Mara. Even if Bitcoin goes up, their margins, their operating margins, their operating cash flows are negative. But in the near term, they can get a positive result in terms of the price going up with it. And the high short interest in companies like this, the positive call skew as call is rising out here, allows you to speculate on that. So if you think the Fed's going to come out more dovish and the dollar may sell off, gold prices may go higher, Bitcoin prices may go higher, you can buy the lower strike and sell the higher strike on Mara and benefit by the higher short interest, buying out of the money calls to hedge the shorts. And this creates positive opportunity for call verticals because of the positive volatility skew as the volatilities buy lower and sell higher. Buy 19, sell 21, whichever strikes that you like here. If we look at BITO, this is tracking the Bitcoin futures, right? Again, the scenario is not quite as bullish, right? In terms of, you notice volatility is falling out here to the 22 and then beginning to rise. So again, you'd have to get further out of the money, 22, 23, before the vol skew begins to benefit you. And again, you could buy the 22, sell the 23 strike in here relatively cheaply, right? And the spread, there's some premium to sell out here too. And so you can capitalize on a 22, 23. If we retest prior highs, BITO works. But Mara gets the addition of a potential short squeeze since there is significant short interest on it. And maybe we break out and run just like we saw, for example, in November, December, where you get the gamma squeeze from option trade and the short squeeze because the shorts having to buy back in to cover their positions. This creates these kind of parabolic moves. Either scenario could play into a weaker dollar. But again, the most pure play on a weaker dollar, if the Fed comes out dovish this week, would be GLD. And again, a retest of 192, 193 up here would be reasonable. And again, if you look out of the money here for March 15, notice that the volatility is rising, which allows you to construct a long call vertical, buying the lower strike, selling the higher strike, buying the lower vol, selling the higher vol. Not much skew in here for March, but again, there is some in here to capitalize on. And so the scenario is if the Fed comes out and is dovish, right? But earnings come out from these big cap names and we see selling pressure, this could create a great scenario for gold to see it move as we're seeing stagflationary pressures due to weaker earnings and also a weaker dollar because of Fed policy. If the earnings come out good and the Fed policy stance is more, again, dovish instead of hawkish, there's two pathways here for gold to move up. Obviously, the bearish scenario would be the Fed coming out hawkish, looking to not cut rates. And obviously, that may cause a breakdown here and may cause selling in the broader market as well. And again, could overwhelm any positives you get from some of these corporate earnings. But again, I think there's 2 of 3 scenarios here where gold does go higher into this week. So if you're trying to find one area to potentially speculate on a Fed that comes out more dovish, certainly GLD is one of those to consider, and it's more of a pure play on the dollar. Now, the market's rally today occurred because why? Well, guess what? Look at Treasury yields dropping today. One of the risks to the market is federal government refunding, basically debt that's maturing that they now have to refinance. And we know that there's about $7 to $10 trillion, depending on what time frame we're looking at here in the next year. Well, guess what? The refunding plans were a little bit lighter than expected. And as a function, we saw a bid in the Treasury market today. And this caused some positive upward drift in stuff like real estate, as an example. Financials, maybe secondarily down here, but generally helped ease some of the near-term concerns of the federal government of gobbling up a lot of the dollars that are available for investment that would therefore detract from buying equities, for example. And there's been some decent Treasury auctions as well. So we're seeing that yields are backing off from here, but I still think there's more room for them to go. unless we start to see a real rotation back to treasuries. And if we see it come back around here, it's probably going to be on negative news. We're probably going to see more weakness generally in equity markets. But again, interest rate sensitive stocks, getting boosted today. Utilities off of its lows had a couple of updates here. Again, falling yields benefit utilities and real estate, not just from a borrowing cost perspective, but also from the stance that their dividend yields may look more competitive with lower treasury yields. So again, this is giving us kind of a backdrop and setting the stage for this week. But the reality is, there's some trade data that suggest that there's those out there looking for something. And NCLH, for example, this was previously one of the top 10 high beta names in the SPHB ETF. We look at SPHB. We look at SPHB today, up nearly 1.5%, outperforming the S&P 500, outperforming every single sector in the market. And these are your high beta names. Of course, NVIDIA is one of those names, right? AMD is one of those names. Also, CCL is. CCL up nearly 4.5% today. Previously, NCLH was in the top 10. It slipped off. It was up nearly 3% today. So what's going on? We're looking around for something that is down, that may not be out, that could reverse if we start to see a risk-on scenario here with better corporate earnings and a more accommodative Fed. And this may cause high beta to begin to break out against low volatility names. And we're going to look at a ratio of high beta and low volatility. You notice here the last week we've seen a rotation back to high volatility, especially today. And again, is this the beginning of a bigger potential move in high beta names, which is kind of this is my short squeeze indicator. We may now be breaking out. And we're seeing is that there is some rotation from an option standpoint, into names that are higher beta, like a Norwegian Cruise Lines, down a lot. If we break resistance here at $18, for example, we may have a run to maybe 19.5. Again, we could see a decent reversal. Today, the trade in NCLH, Norwegian Cruise Lines, is for this week. The stuff can get faded, right? But 7,400 contracts at the 18 strike. Again, trying to create a gamma squeeze on top of potentially a short squeeze here to drive NCLH higher. So we have a gamma level at 18. We break the resistance. We break into that 18 now goes from out of the money to in the money. This could propel this stock. And I'm going to remove this and drive fib retracement. This could propel this stock to maybe a 61% retracement, which is about 19.5 for NCLH. Another one here, Lucid Motors. Terrible company, right? Losing significant amounts of money per vehicle, but the stock has 22% of its float shorted. And if you take the number of shares short divided by the average volume, it's almost 6 days, meaning 6 days of average volume to cover the shorts. Earnings is coming up. Is this the beginning of a short squeeze? You'll notice in the past here, November, we popped and fizzled and never came around again. We finally got a pop here and it fizzled. We had a pop back here. We ran from about $6 to about $8.50, increasing nearly 50%. We could see this move back to 5 if we start to see rotation and rotating back into the gamma squeeze plus short squeeze, driving Lucid Motors. Today, the trade in Lucid Motors was a 2 Feb expiration. Buying out here at the 350 strike, mostly bought. Again, probably a lot of day trade in there as well. But the reality is, again, this may be the beginning of a bigger short squeeze that could carry this back to 5. Plug Power, right? PLUG. Plug, we got the break, we got the pullback, the bounce today in Plug Power Incorporated. Again, we look at the option activity in Plug. It's a 2 Feb again this week, and it's the $4 strike price right here, mostly bought. Again, we're trying to goose, again, another part of the EV space, high short interest space in Plug Power. Again, we could look at a potential retest of $5 in the near term, maybe more on Plug Power. We could look at QuantumScape. Again, another high short interest stocks, again, in the automotive. This is a battery. This is solid state battery technology. QuantumScape. This was a March expiration I want to look at on this one out here at the $9 strike price. Again, Gamma squeeze leading to a short squeeze. Could we see a retest of $10 again? Again, if we see this continued rotation towards high short interest like we've seen over the last week, and again, a lot's going to be contingent on what happens this week. These are some areas to consider. And again, if you look at March out here, notice the volatility rising. There's a lot of hedging, buying calls out here off the shorts. This creates very cheap upside call spreads that you can construct. 30-cent cost on a 2-point spread. If you buy the 8, sell the 10, you're buying 77, you're selling 85. And again, you get a pretty cheap spread in case we go to 10, buying the 8, selling the 10. Finally, we wrap up here with NOI. The drop in interest rates. Again, this may lead to some strength in real estate. This is a mortgage REIT. I don't really like this company a lot, but again, we're kind of at a resistance level. If we do break, we could see a retest of 21. Earnings are coming up, so we got to be careful with that. But this is one of those plays. If yields continue to fall in the 10-year Treasury yield and we continue to see buying in the Treasury market, we start to see some of the easing of the fears in the mortgage space. Again, this may help companies like NOI. And today, again, you're seeing some trade come in anticipation of maybe some kind of healing in that space. This is a 9 Feb expiration, buying these out of the money calls out here at 20. Again, this helps create kind of a gamma squeeze level at 20. So again, if things come out bullish for the week, this is one that may catch a bid, and we could look at 21 as a target. You might jump in ahead of it. The spread is pretty cheap out here. There's about 10 cents you can sell here at 21. Costs you about 30 cents net to buy the 20 and sell the 21. Less than 20 cents to buy the 20, sell the 20 and a half. But looking at a $21 target price here for NOI. Again, leading into the earnings here if we come out positive. Again, may wait to see what happens this week. May wait over earnings, but you may wait for it to run and then get short, which I think the downside is more of the natural play for this particular stock. Folks, we got to wrap it up there. We'll catch you back next Monday for another